we have many debates. Goldman say commodities could rise by another 13.5%. How would you describe where we are in the commodity and the recovery cycle? Good morning, sir.
Good morning. I think we are seeing an economy globally that is still operating somewhat below its full capacity. So call it something like 90–95%, but getting much higher up there. But yet you look at the prices, and when we talk about the start of a new cycle, et cetera, if you look at it, and if I'd said to you in January of last year, before the pandemic hit, that we are going to be down something like 4 million barrels a day of oil demand, and yet the price is going to be exactly where it is today, you would have said, look, we're at the start of a really strong cycle. And I think that's exactly where we are. You know, we've seen copper prices more than double off of the lows. We're seeing strong backwardation in many markets, meaning people really want the physical material today rather than waiting for it for a couple of months, because just demand is extraordinarily strong across the globe. And it's not limited to one sector. And it's all the way from the macro to the micro. All these things are telling us the same thing.
So that's a very bullish jumping off point. Let's digest and segregate. Let's get to China in terms of the demand outlook, let's say, for copper and iron ore. Where are we in that? Because they're trying to lean into slightly less emissions. So that is a risk in that scenario. So talk me through the demand outlook in China on the two bases.
So I think two slightly different stories. I think on iron ore, they're trying to cut emissions. They're trying to be more environmentally friendly. So they're saying we want to reduce capacity. Counterintuitively, somewhat, what that has meant is that then the price for the high-grade iron ore has actually increased substantially. As you close capacity, then some of these units, they want to run them, higher-grade material to still get you that same kind of quantity. So that's pulling up the premium price contract really there. A lot. But you are seeing strong demand for construction. You know, that continues. They still have plans to redevelop a lot of areas. Still a lot of housing that needs to be built, especially in the interior in the West. So that still is very much there. On copper, again, as they're becoming more environmentally conscious, this move towards cleaner energy, electric vehicles, electric vehicle charging points, grid rollout, all of these things require more and more copper. So the outlook there is absolutely, not just China, but elsewhere as well, remains very, very strong in our opinion. And you can see that with the way the flows are going, with even some of it saying, some of these, the premiums would suggest you shouldn't be seeing material come into China, and yet you are. And that's telling you, again, that demand is very strong on the ground as far as we can tell. But I do think that this is a story that goes well beyond China.
OK, so take me beyond China, and I am going to push you for Trafigura's estimate on prices. Mike McGlone at Bloomberg Intelligence says we're going to need to make it above $10,000 to perpetuate this super cycle. So how far can copper run on the upside without being a threat to demand? In other words, that demand destruction, is that anywhere in your psyche?
We're not seeing that yet at all. And in fact, for copper, it is very hard to substitute away. You can do a little bit of it in some of the high voltage lines. You can bring in some aluminium, but copper's unique properties in terms of conductivity, ductility, all of that really makes it very, very unique and very hard to replace. And generally, what you're doing is you're substituting away from other things into more electricity and into things that require more copper. So as you transition away from oil, for example, you're going to move more towards electric vehicles. That requires 4 to 5 times more copper. You move away from coal, you're going to move into solar and wind. That, again, requires about 4 to 5 times as much copper. So it's all going that way. And then to my point, outside of China, I think this is the point, is that it doesn't just have to be China that is supporting this rally. We are looking at a global, multi-regional, multi-sectoral rally here, where for the first time in a very, very long time, you really have strong demand coming out of the U.S., Europe, Japan, Korea. If you look at all these manufacturing numbers, already we're at very, very strong levels. You look at the new orders, those are very strong. And beyond that, we still have 1 to 2 more stimulus plans yet to come out of the U.S. And if any portion of those come through, then we really are looking at a supercharged cycle here.
And the infrastructure plan by Biden is one of those big green infrastructure plans. We've got the EU initiatives on green. Is that in this price cycle so far, or will that add to a multi-year dimension to what you've just said to me?
I think this is multi-year because for commodities, you're not pricing future growth. What you're saying is this is the price I'm willing to pay for the material today. Really the shape of the curve does the rest of it. And I think that's not being reflected yet. We haven't seen the stimulus plan go through. So therefore, we haven't seen, companies or producers really placing the new orders for that material because it's not real yet. It's not tangible. Once the legislation gets passed, in the form that it gets passed, then people start to adjust their buying, and then that's when we'll really start to see, I think, this price action come through. So in our minds, we think that there's quite a bit of more upside still yet to come here.